The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And good afternoon, everybody. It is Thursday, November 8th. A day, well, I forgot what to change the day to today. It's not Bittersweet Chocolate with Almonds Day. That was yesterday. I'll have to look that up during the break. I wonder what today is. I think maybe I found something and decided to, I know what it was. It was Bram Stoker's Day. I forgot to change that. He wrote the vampire books, Dracula. Ooh, Dracule. I always like that one that I can't remember the actor did in the I think it was about early 2002 or 3. He's been in a lot of movies. I'll look up his name during the break. But always, he's a great actor. He's been in the Batman series. He was the detective in it. He's been in a lot of other stuff, winning Academy Awards. Was in Tinker, Tailor, Soldier, Spy last year. I still need to get that movie. I don't know. Has it come out on DVD yet? Anyway, some pretty good stuff, but I like the one that he was the Dracula in. I think it was him and Keanu Reeves, however you say that, Keanu Reeves, the guy from Speed and some of the other ones. But Bram Stoker, 1874. Boy, he was born a long time ago. Love those vampire movies. I remember being scared snotless as a kid after watching Frankenstein and vampire double feature on, I think it was Channel 41, a UHF channel. Staying up late watching bad movies. Gave me bad nightmares for a week. Parents wouldn't let me watch it anymore. Anyway, it is Thursday, November 8th. We're going to, I've got some predictions here as we get into actually looking at the market. Pretty much doing what we believed it should. I thought we'd probably get a little bounce out of here this morning in my morning newsletter, The Path of Least Resistance. I thought that this would fade fairly quickly, and it has. I think we continue selling all the way into tomorrow's close. I don't think that there's anything really to stop us. And, once, like I said yesterday, once you start saying raising taxes and the market gets spooked, especially by, what's her name, Warren, being elected in Massachusetts. They're calling her all kinds of names on Wall Street right now. They're pretty afraid of her and using the S word and the C word, socialist and communist. So we'll have to see how far she goes. But right now, the street is thinking that she's going to be far worse on them than Barney Franks, who's, I guess, leaving. Channel 44, Dr. Paul Bear, the Creature Feature. I'm trying to remember who I had watched when I was young, but it was in there. Anyway, one of my predictions this morning is based on election results, and basically what you have is one party rule now in California. They are jumping for joy that they raised taxes once again today, especially in the San Francisco area, doing a back-of-the-envelope calculation. They're out of money in March. There's probably nobody that's going to lend them any money. And I thought, do states go bankrupt? And the answer I found out is no. They go into receivership. A judge will actually be appointed. He's not able to tell them what they can and cannot spend their money on, just whether or not they come in on budget. We could lend them money. I suspect that that's not going to fly. Who wants to throw a bunch of money at another state just so that they can overspend? But that would probably be the opportunity that California needs. When in retirement, a lot of their higher officials in both fire and police work and transportation, trash and safety are making 2 and 3 times what the national going average is. a lot of those contracts are going to have to be figured out. But I just looked at what they were doing, the amount of people that are leaving California. The last time when Apple started having the sales tax war, they lost somewhere around 2,500 businesses that week that moved instantly to Las Vegas or Nevada in general, I guess. And I think the flight from California is just going to accelerate. They really don't have any kind of control rods to stop the reaction of higher and higher taxes. And my guess is that they'll run for places like Texas and Nevada, other states, Florida, that have welcome arms with low taxes and are able to put their fiscal house in order. California may be a beautiful place to visit, but it looks to me like they're out of money, and just one of the many things that is going to face the U.S. in a national headwind. But I'm going to say right now, I went through it with a spreadsheet, looked up some of the spending that California has, and they can put some Band-Aids on this thing, but I would imagine by March these guys are going to be having to announce that they're in receivership. The only way that they would have made their goals would have been if everybody was able to sell Facebook at about $45 when the first day came out, and they collected about $8 billion in taxes. We know that's not happening. It's going to be more like about $3.5 billion. There were several other companies like that they were counting on to make massive tax payments on some of those IPOs. They just didn't work out. But they had about $16 billion that they thought that they were going to get from the capital investors in California, and it's going to be half or even less. Basically, they haven't cut any of their spending, actually throwing more money at ridiculous things in California. I know some of the people out there that listen to the show listen from California. Maybe I'm all wet, but everything I read over the last 2 days makes me think that there is going to be no fiscal austerity in California, and they're going to run out of money, and they're going to run out of money quickly. Greek unemployment, wow. Is California going to be our Greek state out there? It's hard to say. One thing that's sure for Greece is that their unemployment has now gone up to almost 26%. And if you look at this chart, it's gone from about 13% in the middle of 2010 up to 26%. It's only going to go higher. The Euro board today basically said, we said kind of this week if you did what we told you to do, we'd give you the money. And we're going to really have to check on that. We don't believe you did it. To actually get the vote through last night, they had to fire a bunch of people and throw them out so that they couldn't vote against it. So I think Europe, now that our election's over and they don't have to cover anymore, they've had a pretty big agenda in getting the current president reelected. I think now the veil's pulled back, and we're going to see what happens. And most of it is going to be all the bad news that's been pent up for probably 4, 5, 6 months coming out fairly quickly. And I think that 1350 number is a fairly easy number to get to. My fear now is that I was thinking we could get down to 1350, and we might have a good place to buy. I'm suspecting that this may be, especially looking at the volume and movement over the last couple of days, this may be more of an ABC down, maybe bounce at 1350, somewhere around there where decent support is, start doing some consolidation back up, probably see 1385 where we're at here, and that might be the next point to actually pull the trigger for an ABC down. But I see no change to this exodus of people selling before the end of the year to escape what most people think is going to be at least 10% higher capital gains rates coming out soon. Microsoft is confirming it will retire its Windows Live Messenger service in favor of Skype in 2013. Probably not a big deal to so many, but in the newer Xbox 720s that are coming out next year, some of the core and even all the new products from Microsoft, their phones, Xboxes, their desktop systems, Skype is going to be kind of built in just like Explorer used to be. Going to be a big deal. As always, you can give me a call at 877-927-6648, 877-927-6648. I'll be glad to take your call. Maybe I'm all wet about something. You can always talk to me about that. I mean, we've got 1387. We went down to 1381. We bounced. I suspect we continue to move down and close maybe closer to 1380 by the end of the day. We are thinking that we could, if we see one more heavy down day, we're right into that 1350, and it could come as soon as the close of tomorrow. Volume is good, 2.4 billion shares. My prediction yesterday's show of coming out at about 4.3 billion pretty much came in right on line, 4.3. We're probably going to come in at about 4.2 or 4.1 today. Not quite the move, down 7 points on the S&P with 2.4 billion shares at the current time. But a lot of that volume comes just in the last few minutes. What else do we have going on here? Somebody had a question in an email. Of course, you can always email me at path@tfnn.com. That's path@tfnn.com. It was asking me about whether I was bullish or bearish. In 2003, a book came out that I recommend highly. It's called Fooled by Randomness. In this, the author, Nassim Taleb, talks about being stuck in I think it's a Bear Stearns. Maybe he worked for Bear Stearns. So I think that's what it was, in Chicago. And someone asked him if he was bullish or bearish. He says, I'm both. He says, I think that the market could go up, 20 more S&P points, and it probably will. Probably 80% chance, probability it goes higher, 20 points. But I'm kind of bearish, too. I think there's 20% chance it goes down 80 points from here. So if you ask me if I'm bearish or bullish, they really have no meaning for them. What I normally say when I'm bearish or bullish is I think the direction of the market. I always know that I can be wrong, and I'm always looking at that. But normally I have pretty good gauge on it. I know that could I be wrong? Could last week at 14, or actually on Tuesday at the close at 1428 on the S&P, could it pop 20 points higher? Yeah. I was much more believing that it was going to be to the downside. But you always need to be thinking both bearish and bullish. Hopefully, if you're on the right side of the trade, the small number is always on the opposite side of your trade. But always be looking if you're going to be wrong. Where would it go? What would it do? So I'm always bullish and bearish. I'm bearish now in thinking we go to 1350 rather quickly. We will be back in a minute. Give me a call, 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we come back, I wanted to go into McDonald's and take a look at it. It's let me go back into here just to get a quick MCD quote on it. See how it's doing at the moment. Off 2% right now. Comparable same-store sales at McDonald's, which is MCD, fell 1.8% during October, while U.S. stores fell 2.2% due to heightened competition between Burger King and Taco Bell. Comparable sales in the Asia-Pacific, East, and Africa segments dropped 2.4%, and Europe fell 2.2%. This is the first drop in comparable sales for McDonald's since 2003. I'll say that again. This is the first drop in comparable same-source sales in McDonald's since 2003. We've got, let me remove that. We got it, $19.43. So we'll continue to take a look at that. It's been down here to what is that, 85? Is that right? 86. Let me go ahead and pop that back up. 85.05. Okay, so we are below. What I must be missing something here. Let me go back and look. I must not have today's tick up. Let me see. Overlays, web link, pro links, option server. Let's try the other server here today and see if I'm missing that particular. Yeah, there it is. So we have gone below that. Volume's 8.4 million shares. It needs to come in less than 12 million shares, or you'll have a solid break of that low for McDonald's, and be taking a look at that. Let's see what else we have here. I've got to find an easier way of switching back and forth on this. We've got... what else? AMC Networks. AMCX surged 13% at the open this morning. Third quarter earnings slipped 9%, better than the 33% tumble that had been expected. The cable content provider generated revenue growth of 17%, easily outpacing forecasts for a 2% gain. Of course, their favorite show, or my favorite show on their network, is now the Walking Dead. But of course, I like Breaking Bad also. We've got Kevin from Sacramento. How you doing today, Kevin?
Good, Dave. How you doing?
Pretty good. Is there any kind of discussion before we get into your stock about what the financial future of California is? I just saw a couple articles, did some back-of-the-envelope calculations, and saw that there's probably not anybody in the Congress there of California that's going to do anything before you guys run out of money. You have any?
I don't think so. Matter of fact, I think at the national level, I think we're going to almost have to go bankrupt before anybody will take action.
Yeah, I found out you can't go bankrupt.
Well, whatever you want to call it.
Yeah, you go into receivership, and the judge tells you got to get to here, and this is how much you can spend. You can spend it any way you like, and that's it. But no, I think
that's the only way you make these guys make a decision. Is there has to be some kind of forcing mechanism. I don't think they'll do it on their own. And now that you've got super majorities in the assembly, both houses of the assembly, you're pretty much headed to a forced action of one kind or another.
Okay. You calling in about Cirrus Logic today. What are you thinking about doing with this thing?
Well, I've had really good luck in the past selling puts against it. Mm-hmm. And last week they came out with earnings, and the stock has plummeted ever since, dropped about 11 points. Since very positive earnings. And, they're tied very heavily with Apple. And so the next year and a half, I think the revenues and profits look pretty good, but somebody doesn't like something with it. They've been selling it off pretty heavily.
I've got a list of the stocks that actually end up being like 95% of what Apple does, and Cirrus Logic is not in there.
Oh, they're not?
No. I don't know if you heard the show on Tuesday.
No, I didn't. Okay.
But someone called in and maybe it was TriQuint or some other stock, and said it was a big supplier to Apple. About 3-4 weeks ago for the Tech Insider, I put out a special edition of the ones that are big suppliers to Apple and their iPhones and their tablets. And you want to hang on through the break?
Sure.
Okay. I'll get back. We'll go through those again because I think it's important to everybody, because I keep hearing all these stocks that are supposed to be huge suppliers to Apple, and for the most part, they're not big suppliers, or at least dollar-wise, in the devices, big suppliers to Apple. We'll be back just in a minute and talk to Kevin. We've also got another call, so we'll try to go as fast as we can.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
We are back, and we are talking to Kevin in Sacramento. I did a special report which kind of led me to going short the market several weeks ago, whenever it was. And we did it on, in fact, I brought it up on the Tom O'Brien show in the Tech Insider Hour. And here are the stocks that you want to put down if you're trying to think that it's an Apple play. That is ARMS Holdings, ARMH, Avago, AVGO, what's the memory company? MU. I'm just drawing a blank on that. OVTI. They make cameras. Qualcomm makes the chips. QCOM. Skyworks Solution makes some radio parts. SWKS. And Triquint Semiconductor. TQNT. And that's for the iPhone 5, but most of those parts are interchangeable with the tablets also. So,
okay, I was thinking Cirrus had an audio chip in there, and maybe
they do, but
that they were.
They do, but if you get a dollar chip in there, it just doesn't do anything for you. See what I'm saying?
No, I do.
You're just not going. You got to get in some of the more expensive chips that are. How can I say? The stuff that you have high margins on. Any of the standard kind of technology, or a lot of it, is just commodity business.
Sure. And
you're not making any kind of margins like Qualcomm is. In fact, the Qualcomm I listened to last night, and the reason they had their big bounce is they're not even building their chips. They're more like ARMS Holdings now. They license the designs. It says Qualcomm on the chip inside, but they're not even making the chip. They just license the design to Apple and let them make it. And they made a lot more margin. That's why they bounced today.
Yeah.
So
I may have misstated when I said they're a big. They're big in terms of their sales.
Right.
But their revenue right now, I think 70% of it is tied to Apple.
Right. It's probably in that area. Now, when we look at the chart, the one thing that concerns me is that huge volume day down.
Yep.
Okay. That generally means one thing, and that is you could be right on the stock, but it may be a long time. That a sign of weakness like that, a big candle with big volume, even if it stops here, means it's going to consolidate for a while.
Sure.
4 weeks, 6 weeks, 8 weeks, 3 months. The one thing is normally you don't get a run right back up to the last high at $42 or the other one at 45. So what I'm going to say is I like the chart except for the huge volume on that down day. It came back and it basically finished filling this gap today that occurred on 7/31 when it came up on 14, almost 14 million shares. But you exceeded that on that heavy volume down day. Now that we're finally finishing it on lighter volume over these last 2 days, does mean that you've come into some level of support. The question is whether or not you go down and hit 24.94 again. And the problem is with that heavy volume day, your odds have gone probably up dramatically that it can go back to that 24.94. That we haven't hit 1350, which is my call on the S&P, is problematic. In that if you don't hit that 1350 and what's going to it with much lighter volume, and again today I'm already seeing heavier volume again. If we see that again tomorrow, go down and hit 1350, I think we could. It may just be an ABC down in actually going much farther down than I early thought. Early, sure. I can't even say it. Earlier thought, he said. Okay, but I mean that's the problem you have. I think that there's better stocks out here to play on a bounce, and one of them would be don't find anything that had a huge down day, because you're going to start finding resistance exactly at probably about $34. Even if it bounces, you might get all the way back up to that gap, first gap at $38. But you don't know when the legs are just going to be sawed off from you. Sure. 4 to 6. My prescription: 4 to 6 weeks of consolidation down there until all the volume and interest is given up. I'm almost thinking, especially with the huge parade of people to get out of the market right now, this market can continue to sell all the way into the second week of December now. If we get the horrible numbers I think we're going to get in after Thanksgiving because of Hurricane Sandy and the bad retail sale numbers on the East Coast, we're probably also going to see really bad numbers for unemployment now that the veil's taken off of the election. It's hard for me to think that we're probably going to have a great buying opportunity until maybe after the first of the year. But we may know as early tomorrow. If we come in and have like 3 billion shares tomorrow on the consolidated New York Stock Exchange tape, and we get down to that 1350, 1355 level, then that may be it. But we got to see some kind of pullback in the volume. And right now I see everybody running for the exits and people yelling fire.
All right, Dave. Well, I really appreciate your thoughts.
Okay, look at those other stocks, though, but because even if they aren't a big part of Apple, they're probably going to trade with that set of stocks. I actually did a test, and those do have extremely high correlation. They broke long before Apple did. I suspect that they're going to bottom before Apple does, and Apple's probably not going to do anything before it tests 522. So, you want to look at and see those stocks also come back together before you make a play on this. Okay.
Hey, thanks a lot.
You bet. Now, we also have a phone call, if he's still there. It is Fish from Riverview, and a general question. A Fish is a first name?
Yeah.
Okay, I just want to make sure that it wasn't just like a nickname.
Yeah, it's a nickname.
Okay, that's fine. That's what I wondered if you had a cause to sue your parents or not. I guess that's
no, I don't.
Okay.
No, I don't. I have a question for you, and you somewhat answered it, I think, right now. But here's my question. Given the big down day yesterday, I took a large position in the S&P at the end of the day.
Uh-huh.
So looking for a bounce. So that's what my question is about. When would you close it, or would you close it today, or would you, how long would you wait to look for a bounce? What's your words of wisdom on that?
If you've been listening to the show, are you watching on Tiger TV?
No, I'm in my truck right now,
okay.
So I haven't been able to listen today.
That's fine. When you go home tonight, it's just because I'm showing a chart on Tiger TV. It is archived, so you can go back and listen to it, and it's 41 minutes after, so you can kind of skip through and find this chart. But one of the tools that we've used for a long time is a thing called Confluence, and that's where two Fibonacci moves actually go together to show you a place that should be support. And if you get a nice two ABCs in a row, like we had on the way up in the S&P, you're going to get a little, if you get a little range between the 381 of one and the 618 of the other, and it's very tight, and it's over a series of, let's say, months, which this one was. You normally get this real little range, which in this case is right around 1350, and that is where support generally is. And unfortunately, this is a tool that's used way too much. It's almost like everybody that gets this is a hammer, and everything they see is confluence levels. They don't work that way. They have to set up very specifically to work well, but this is one that does. There's a range of about 5 points at 1350 for confluence, and the ABCs that make that up start at the low on November 25th as your A point for the first one. Your B point comes in on April 2nd, and your C point comes in on June 4th. You can now look at that as the next ABC up, starting from April 2nd. The B point becomes June 4th, and then your C point became the high at 1474 on September 14th. Now that sets up a very narrow range between those two Fibonacci ranges of about 5 points at 1350. And because it's over an extended amount of time, that range is very narrow. And when you watch it tonight, you're going to see that there's yet another Fibonacci range, but it's more like about 30, 40 points. Those are kind of congestion zones. It becomes harder for it to go through, but they're at best mediocre support. This one should be fairly decent support, but I don't think you're going to get a bounce until 1350.
Okay, and we're sitting at what right now?
The current price was like, let me get it here for you right now, 1383 with 2.6 billion shares. So we're going to have around 4.2 billion shares, so it's going to be another big day. I suspect that we could get one more huge day down like we had yesterday, and it would take us to that 1350. Maybe it happens on Monday or Tuesday next week, but normally these things come in threes. And while we've got a little reversal today, I think you're probably looking at that 1350 as a good spot to just wait until it gets there. I mean, this is fairly ugly today. We're down 10 points. So, is it all that horrible? No. But, I'm thinking we're probably going to close around 1380 today, and that leaves another 30 points down before we get it. Have you heard about the tick in the trend indicators?
Yeah, I'm familiar with it.
Okay. Normally what you're going to get before we get a bottom after a huge move like yesterday is we're going to get one big huge tick move. Then about 2-3 days, 4 days later, you get yet another push down. So when it hits that 1350, you're probably going to get an automatic rally. An automatic rally is one that happens without preparation. There isn't. It's kind of like looking at a still lake. You have no idea how deep it is. You don't know how far it's going to bounce. You're probably going to get that bounce. That characteristic of that bounce is going to tell you especially as it comes back down one more time, what we have in this marketplace. But I suspect that you could get a bounce back up to 1385 area, and that's maybe where you want to reshort this market if that volume is very light. So possibly go long at 1350. If you don't have volume, if you don't have some kind of sign of strength back in this market by the time it gets back to where it is about here, I'm thinking this thing is setting up for some larger ABC downs. And it may just be a huge tidal wave of bad news that's been put off by the election. I think we've seen that in Europe already. I mean, the market was trying to recover, and as soon as everybody found out that they weren't going to give the money to Greece, and yesterday was the news that basically Germany's in a recession. Everybody knew that already, but they just finally came out and said it. I think all the bad news we're going to get is going to be pretty strong over the next 2 months. So it's going to be tough to be long. And it may be one of these things. Normally selling is over by about the 15th of December, and you might get a little Christmas rally between the 15th and the 24th or something, but then the market's so dead it doesn't really matter. So a lot of times if you can't get that little run somewhere between the 12th, 15th, and Christmas for the Christmas rally, and of course maybe just a bounce of people being short and just short squeeze bounce up, those are not bad to play. You can make some money on those. But if you're thinking for the market to come back as a bull market, I'm thinking at least first of the year. Okay, can I ask you a quick follow-up question? Go right ahead. I'm just trying to visualize all that you're saying. I pulled over because I'm driving without being able to talk, watch Tiger TV. Which I almost thought you said you were going to take your medication, but go ahead. No, it's not that bad. Okay. So here's my bottom line, and I'll listen to this again tonight, which is what I normally do. But my question is, would you just? Like I said, I took it at the very end of the day. I took a large position. So you're off 10 points right now. Yes, I took it at the very end of the day yesterday, like 5 minutes to go. And my question is, would you just close it today, or would you wait for a particular stop to close it? And I was really only looking to be in it a few days on a bounce. Yeah. But so that's kind of my bottom line right now, and then I'll listen to what you said and look at it later. I think we're selling right into the close on Friday. I've seen absolutely nothing that says anybody's really stepped in here with any kind of gusto. Now, could it bounce again tomorrow and you hate me? Yes. I'm betting on this thing closing at 1350 either Monday or either close tomorrow or maybe Monday or Tuesday. So I really just don't see anything out of a bounce. You really, when you get a huge move like yesterday, it rarely bounces immediately. Even if it stays just flat. A lot of people will, especially in the gun-ho days, are going to go full margin. And the market seems to already always know that. And you get about 3 days if you're on margin to cover. So almost always when you get these big moves, you want to count 1, 2, 3, and then you know that anybody that was on margin's out of the market. But especially being short and a short squeeze, you see that almost always. You'll see a short squeeze that lasts 1, 2, 3 days. Short, or even more than twice as likely to use margin. So I'd like to give it what I call the 3-day rule. And, 1 day is not it. You don't get a huge day and then jump in. You give it about 1, 2, 3, and then maybe. Okay? Okay, so your bottom line, you're saying just close it and wait. I would close out. This market is dangerous. Okay. Thanks a lot, Dave. Bye. I really appreciate your time. You bet. Thanks, Dan. Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading.
You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
As we come back, wanted to get into and finish up a little bit of news. Got a few minutes if you want to call in, 877-927-6648. Appreciate the calls today. When we look at the what we have left here, one of the things today is Universal Display Corporation's panel, PANL. I know it's a favorite of traders in the den. They all like to play this one. And Cree, C-R-E-E, they're both LED manufacturers, but probably a little less in this one. They license a lot of their technology. I've had a problem both with Cree and because of panel, because their models are actually licensing their technology in the long term to other people, although I think Cree makes a lot more stuff than panel. Panel, I think, only makes a few LED. Cree makes a lot more light bulbs, that kind of stuff. But they came out today, and this got shellacked. They were off 30% after hours last night. They're still down. Let's see if I've got anything here. let me go ahead and pop it up, PANL. Yeah, they got down to 21.55 today, printing off just above $23 right now, but that's still 18%. These companies do trade, and I've warned people about these before on the show. They trade like a Rambus model. That is, licensing, technologies, patents. Those companies, it's very hard to find out when something is going to change in those. They trade like biotechs. The news comes out and it's always huge. It rarely seems to be minor, and you rarely get any kind of indication like biotechs that something is up. A lot of companies, you can start seeing that maybe someone knows something and they start sneaking out, and you get a clue to get out also, or to get in. Unfortunately, with these deals tend to be announced on and off and are so big that insiders don't get to trade on them early too much. And biotech, it's, you get some government official that publishes a report on it. It normally doesn't leak. It just happens after hours and your stock's up 50% or it's down 50%. So I dislike trading these. I know a lot of intraday traders, probably not a big deal, but holding these things overnight or into earnings are always kind of all or nothing propositions. But being down 30% overnight, that's a tough one to figure out. But Universal Displays sees reduced guidance. Their numbers weren't all that bad, but just like everybody else in the world, they are seeing a pullback. Amazon is officially entering the wine business, making more than 1,000 wines available starting today. I like to see focus, and I'm trying to find out just how much money they would make shipping wine. I know that there's so many different laws in so many different counties, and some counties are dry, and some counties are not, whether or not UPS could deliver these on certain days. I'm kind of trying to think, I know there's a lot of business in wine, but to me, Amazon's becoming kind of a grocery store, and grocery stores have notoriously had bad margins. In fact, almost everything Amazon's doing right now, they are being come after by other manufacturers in the cloud space. IBM's coming after them real hard. Hang on a second here, see if I can get. I got a call. Nick from Oklahoma in Skyworks. How you doing, Nick?
Yeah, not bad. Thank you for taking my call.
Well, it didn't give me enough time. I got 5 seconds. What do you got?
SWS.
Yeah, unfortunately, we're out of time. I appreciate it. Maybe I'll do it for you first thing tomorrow.
Thank you.
Okay. You all have a great, safe night. See you all tomorrow. Thanks, Nick. I'll try to answer that in the morning.